Well, the Reserve Bank is expected to leave interest rates unchanged today following a lower inflation figure. Headline consumer price inflation, that's your CPI, was down to 4.8% year-on-year in October, just from 5.1% in September. Let's not discuss the implications of this and the outlook in terms of interest rates with the Executive Chief Economist at Alexander Forbes, Lisiba Mutata. Lisiba, good morning. Thank you very much for your time. Just on the inflation, I mean, was it to be expected that it will sort of slow down a bit? Was there were some indications earlier, and what would those be?
So that number 4.8 was exactly what market consensus was. The 5.1 of prior month was driven by the housing component of CPI, because sectional titles, they're recalibrating them, how they look at them within the CPI index. What we call imputed rentals also are calibrated differently. That's why we saw that higher number. So 4.8 is within what was expected. In fact, going forward, it just shows that SA is in a low inflation environment.
Okay, that's good news for consumers if you're in a low inflation round?
It's very good because it means the cost of whatever you're buying is less. Although food prices are coming down, meat prices remain sticky. So consumers will find themselves still paying a little bit more on mutton, on beef, even on chicken. But the overall basket is actually down.
The fuel price will not impact us going forward at all. I mean, we saw the fuel going up the last 2 months.
Yeah, so fuel continues to go up. It could even go further up from here, because what's happening is that the global economic recovery, it's actually on a better footing. There is some demand for oil that's now naturally coming back into that price, and that's lifting up the oil price. And with the rand slightly weaker, we find that the feed through of high oil prices and weaker rand begins to come through in petrol prices.
The rand did improve slightly after Robert Mugabe's resignation. We saw that it was about 14. Yesterday morning it was about 13.90 odd, stuff like that. And the inflation figures, can they have an impact on the currency thing? No?
No, so I think there's very little correlationship between markets and what happens actually in most sub-Saharan Africa. You could have a Boko Haram situation in Nigeria, you could have a war in Congo, you could have a change of leadership in Zimbabwe. Doesn't really materially impact the financial markets in SA.
So your namesake, I mean, no, it's not your namesake, rather, sorry, the governor of the Reserve Bank, Lisicha Khanyago. I was giving you a new name.
All very similar, isn't it? Yeah, but yeah.
I mean, the MPC, they're looking at all of this today. Should we be looking to unchanged, as we've been saying in our introduction, you know, or should we be looking for some relief?
No, so here it's an important MPC, because a few things are different now, which includes the discussion about fiscal policy. You have seen in the last 2 years, central bank governors began engaging in fiscal policy, talking about it, deliberating on its outcome. I look forward to hear what the governor is going to say about fiscal policy in SA right now, because there are changes. There's a new committee set up outside what we understand to be the budgeting process of the National Treasury. There's been a resignation of Michael Sachs at the Treasury, who headed up the budget office. There's a lot of change, and I look forward to hear how the MPC deliberates on fiscal policy. It is clear that they will leave interest rates unchanged. We are also at the eve of a potential downgrade tomorrow. So it feels like we're in a little bit of a calmness before the storm ensues, and what we'll want to see what they say about that outcome.
So they'd rather be cautious and just leave things unchanged. Rating agencies, Moody's and S&P's tomorrow, you said now we're anticipating a downgrade.
It's clear. They look at statistics. So it was clear that that which we promised on the wage bill did not happen. So we had Minister of Finance, Nene, saying that we're going to stabilize. That didn't happen. We saw it in the medium term. We're not consolidating. Debt levels are going out of kilt. Growth is not arriving. So for an emerging market country like South Africa, with a debt to GDP ratio around 60%, you need to be growing at 4% to have a very different conversation, that which India is having. They have their debt to GDP at 68, but they're growing at 6. That's why they've been upgraded by rating agencies. Okay. So in our case, it's a very different outcome here.
Okay, thank you very much for your insights as usual. Executive Chief Economist at Alexander Forbes, Lisiba Muthatha. Now let's take a look at how